Welcome to lecture 7 of business taxations, and in this lecture we are going to discuss the deductions topic. So let's explore the contents of this lecture. We are going to understand what deductions are. Remember, we have understood different allowances and their treatments. We saw medical allowance, house rent allowance, entertainment allowance, and we have understood the concept of taxable income. So once we calculate a gross income, remember what we previously called taxable income. What we meant by previously taxable income was that the basic salary plus the dearness allowance, the other allowances added up would give us a gross income. So then we would less these deductions, these different type of deductions that we are going to explain in this lecture, and once we deduct them we would get taxable income. So previously we didn't as we didn't discuss deductions, so gross income and taxable income were same thing in our lectures. We didn't differentiate it between gross income and taxable income, but now once we discuss the concept of deductions, we would have to differentiate between gross income and taxable income. So in this lecture we are going to understand what are different types of deductions that we are going to look. We would discuss zakat, education expenses, and loan on house construction. So let's start with the deduction topic. So there are different expenses that the income tax law allows us to minus it from our gross income before calculating our taxable income. So what we mean to say is that these deductions are the expenses that we are allowed to deduct from our gross income. So for example, zakat paid under zakat and ushur ordinance is deductible allowance. It's covered under section 60. Then we have donation to approved institutions. These institutions are listed in schedule 2. So when we say approved institutions, then how do we know the list of the approved institutions? These approved institutions are covered in schedule 2. Again, this is section 61. Payment to workers welfare fund discussed in section 60A. Payment to workers profit participation fund, it's section 60B. Then markup on housing scheme is section 60C, and education expense is section 60D. Before we move forward, okay, let's discuss these sections, and then I would get you I would show you the copy of income tax ordinance, and we would see what these sections means, right? The numbering of these sections, and how do we check the list of approved institutions in schedule 2. Okay, let's start with deductions. So so zakat paid is deductible allowance, right? Whatever is our gross income, remember what gross income was. It is basic salary plus all allowances. This would become our gross income. So we deduct or we less the deductions, and then we have taxable income. So zakat, whatever zakat that we pay is deductible, right? We would minus it from our gross income. Then donations are also deductible if they are paid to approved institutions, right? Again, the list of approved institutions is in schedule 2. We will discuss it in a while. So but as compared to zakat, although zakat is also, I mean, there is also limitations of zakat as discussed in zakat and ushur ordinance. We pay zakat at 2.5% of our wealth. In case of donations, it should not exceed 30% of total taxable income in case of an individual. So whatever our gross income is, this this donation should not exceed 30% of that taxable income. So for example, if our gross income is 1 lakh rupees, 30% of this 1 lakh rupees would be 30,000. So we can if you paid donation of rupees 30,000, then we can deduct these donation of 30,000 rupees from our gross income, and then whatever amount we would get, we would pay tax on that specific amount. But let's just say if we paid if we paid donation of 20,000 rupees, then should we deduct 30,000 or 20,000? Obviously 20,000, because this is what we have paid. The limit is 30%, right? But it doesn't mean that we always have to deduct 30% of our taxable income, right? It is the limit, it is the maximum that it can go. So in this case, we would deduct 20,000 rather than 30,000. What if we paid 40,000 as donation? In that case, what is the maximum allowed limit? It's 30,000. So instead of deducting 40,000, we would maximum be allowed to deduct 30,000, right? In case of a company, the maximum deductible allowed limit is 20%, right? In case of an individual, it's 30%. In case of a company, is 30%. Okay. So markup on housing society or housing financing schemes. So most of the time government encourage construction of housing, because construction of housing brings employment, they bring economic growth, because then a lot of sectors would be involved. For example, if we are building a house, then the cement sector would always also be involved. The cement sector would grow, the steel sector would grow, then there is ceramic sector which would also grow, right? Then laborers would get some wages, and so the idea is that government encourages constructions. For constructions, we sometimes get a loan, right? And we have to pay certain interest on those loans. So to encourage construction, what government do is they give some concession on these interest, right? Or give some tax relief on these interests. So any markup here means interest used for house construction is allowed as deduction, right? So any interest we pay if we have got finances to build a house, right, would be allowed as deduction if the loan is used for construction of house and not for renovation, right? We can get loan for renovations to renovate our house, but that would the interest paid for the loan that we have acquired to renovate a house would not be deductible. The interest only for the construction of house is deductible. The amount allowed as deduction is limited to 50% of taxable income or 2 million rupees, whichever is less, right? So there is a limitations, as we saw in case of the in the previous slide of donation. There is a limit in case of deduction of interest. So let's just say if our again taxable income is 1 lakh rupees, then 50% of this taxable income would be 50,000 rupees. So if the interest that we are paying is 20,000 rupees, then we can deduct this interest. Why? Because the limit is 50% or 2 million. So whichever is lesser, right? So 2 million. So which one of this is less? This 50,000 is less. So this would become our limit in case of deduction in house financing. So if the interest, in our case, yearly interest is 20,000 rupees, then it do not exceed that limit and it is allowed as a deduction. What if we are paying interest of 70,000 rupees? Then the maximum that we are allowed is 50,000 or the 50% of taxable income, right? Okay, so let's move forward. The next deduction is educational expense. The education expense that we incur is allowed as deduction provided that individual's taxable income is less than uh, 1.5 million or 15 lakh. So if total yearly income is less than 15 lakh, then whatever expense that you incur on education is allowed as deduction, but there is again a limit to it. As we saw in previous slides, there was a limit in case of donation, there was a limit in case of uh, this this markup, this interest. Similarly, there is a limit in case of educational expense, and the limit is first 5% of the total tuition fees paid during the year. So whatever tuition fees that we paid during the year, we would calculate 5% of that amount. Let's just say we paid 1 lakh rupees as tuition fees. So 5% of that 1 lakh rupees would be 5,000. This is the first calculation. The second is 25% of the taxable income. So if taxable income is 1 million rupees, then 25% of this 1 million rupees would be 2 lakh 50,000, right? So this is the second calculation that we need to do. The third is number of children an individual have multiplied by 60,000. So let's say if individual have four children that are going to school, multiply by 60,000. So that would be 2,40,000. So now we have calculated these three amounts. What is the reason for this? Because the limitation says that whichever of above these three amount is lesser would become the limit. So which one of these three is lesser? Obviously this 5,000. So this 5,000 would become the limit, right? It is not that we would always deduct this 5,000, but this would become the limit. So if our educational expense for the year was 1 lakh rupees, so how much deductions are we allowed? We are allowed to deduct 5,000 rupees from our gross income. After deducting this 5,000 rupees, we would get taxable income. We would have to pay in the tax on that taxable income, on that deducted total amount after deductions. Okay, so let's have an example starting with the educational deduction. The taxable income, if Mr. Javed for the year 2019 is 9 lakh rupees. So this is the gross income. Remember, it is saying taxable income, but basically this is a gross income. This include all the basic salary and all the allowances. He has paid 6 lakh rupees as tuition fees of his 4 children. How much will be allowed to him as deductions, right? So we already have the gross income. We do not need to calculate gross income. What we need to calculate is the total deduction, right? So we would say gross income, that would become 9 lakh. Then we would less deductions, but we would have to calculate deductions for each element. So in this case we just have education, Within education, we would have 5% of tuition fees. So 5% of tuition of this 6 lakh rupees would be 30,000. Remember, we are calculating just the limit, not the amount that is allowed for deduction, just the limit. Okay, sorry, we are calculating the deductions that is allowed, right? Second is 25% of the taxable income. So 25% of this taxable income, 9 lakh rupees, would become 2 lakh 25,000. Third is number of children's multiplied by 60,000. This would become 2 lakh 40,000. Okay, so whichever of this is lesser amount would be allowed as deduction. So 30,000 rupees would be allowed as deduction, right? So after deducting, we would be left with 8 lakh 70,000 rupees. Should we pay tax on this 9 lakh rupees or 8 lakh 70,000 rupees? Obviously, this would become now our taxable income, and we would pay tax on this 8 lakh 70,000 rupees. Okay, let's have one more example. The salary is 35,000 rupees per month. Remember, PM stands for per month. If I haven't mentioned anything, then you would assume that it is an annual payment. Bonus is 6 months salary. So if salary is 35,000, so 6 months salary would be equal to bonus. Additional allowance is 30,000. Remember, additional allowance can be anything. It is not exempted from tax. It is just any kind of additional allowance that can be paid. For example, in some institutions there is a special allowance that is paid, right, for working in that institution. For example, doctors are paid special allowances, so that special allowance is taxable. It is not it is taxable, right? So allowance for electricity, then we have HRA, which stands for house rent allowance, then we have conveyance allowance, and the employee owns his own car which he uses for personal purposes. Now remember, this might be tricky because it says employees owns his own car. So when he owns his own car, then the employer didn't then gave any facility, conveyance facility, right? So this is irrelevant in this case, right? Owning own car by an employee is not taxable. So let's calculate tax on this this example. So the basic salary is 35,000 multiplied by 12 months, so we get 4 lakh 20,000. Then we have bonus, which is 6 months salary, that would be 2 lakh 10,000. Then we have additional allowance, which is 30,000, and then we have utility allowance, which is 12,000. Then we have house rent allowance. Allowance is fully taxable, 40,000. And conveyance allowance, that is 9 lakh 6,000. Sorry, 9,600. So the whole amount becomes 7,21,600. This is our taxable income. Why we are calling this taxable income rather than gross income? Because in this question we do not have any deductions, right? If there were deductions, we would have called it gross income, and then we would have deducted the deductions, and then we would have taxable income, right? But in this case, the gross income and the taxable income would be same because there is no mention of deductions. Let's have another example. Mr. A is employed in a scale of the scale is given. His basic salary is 35,000 per month. Other benefits provided to him by his employer during the year ended on 30th June are given below. Calculate taxable income. So we have been given dearness allowance, entertainment allowance, then conveyance allowance, contribution to recognized provident fund. Okay, so what are the contributions? Employee's contribution is 13,000 rupees. Employer is also 13,000 rupees, and then we have interest credited at 15%. Employee A has been provided a rent-free furnished accommodation by his employer. He was entitled to accommodation allowance of rupees 1 if accommodation was not provided. Further, salary of a sweeper who works in Mr. A's accommodation is 72,000 rupees. This salary is also paid by his employer. So this is a comprehensive question. Let's start with the basic salary. So basic salary is 35,000 rupees per month. So that would become 4,20,000 rupees. Then there was dearness allowance. Which is 18,000 rupees. Then we have entertainment allowance, which was 26,000. Conveyance allowance in this case is 20. Sorry, let me go back. Okay, conveyance allowance is 24,000. Then we have contribution. Remember, employee's contribution is already deducted. It is automatically included, right? So employee deduction, employee contribution is 13,000, but it is already included, so we did not include it. Then employer in contribution. Okay, so in case of a recognized fund, there was a rule that we need to follow. You can pause here and go back to our previous video, check what is the rule regarding the recognized fund, because this is a recognized fund. And if you remember, in case of recognized fund, it should not be lesser of 10% of the basic and dearness allowance, or 1,50,000 is exempted, right? So in this case, we need to see we need to calculate this exemption, right? So 10% of basic salary for like 20,000 plus this 18,000 of dearness allowance, this becomes 43,800, right? Or 1,50,000 rupees. This much amount is allowed as exemption, but in our case the amount that employer is contributing is 13,000. So in this case it is allowed as deduction. It should not be included, right? Then interest should also not be included, because remember, in case of interest, it should be If the interest is less than 16%, then it should not be included. So in this case, it is less than 16%. So again, interest would not be included. So any of these contribution or the interest would not be included. And then we have traveling allowance. Now remember, traveling allowance, it stands for TA. It is paid for special duties, and we will discuss this in next video. Whatever amount that is paid to perform a specific task, right? This traveling allowance is paid to government employees when they have to travel to some other city to perform some government task, some official task. So in that case, this traveling allowance is not taxable, right? So the traveling allowance is paid 15,000 rupees. It is not taxable. Okay, next is the employee had been provided an accommodation. So if the employee was not provided accommodation, then he would have been provided 1 lakh rupees. Remember, in case of this accommodation, you would have to calculate 45% of this minimum of time scale. Remember, so in this case, the minimum of time scale is 32,000 multiplied by 12. This is per month. So if we multiply this 32,000 by 12, then we get 3,84,000. So 45% of this 3,84,000 would be 1,72,800. So this is the 45%. And remember, then there was this rule that whichever is higher, whether the amount that would be paid if he had not been provided accommodation, or 45% of the minimum of the basic scale, whichever is higher. So in this case, this amount is higher, so it would be included as accommodation facility. So this would be 1,72,800. Last is salary of the sweeper. So it is again a facility provided by the employer. So the amount is paid by the employer. If it had been paid by the employee, then it would had not been included, but because it is paid by employer, so this facility would be included, right? So 72,000. So if we add these up, we get 7,32,800. So this amount is again gross income and as well as taxable income. Why? Because we are not provided any deduction in this example. We would have deduction related examples in next video, but for now we just want to focus on comprehensive examples. So we have covered each and every aspect of this question. We have seen the deduction allowance, dearness allowance, entertainment allowance, conveyance allowance. The contribution was not included because they didn't fulfill the criteria, and we have seen that 45% of the minimum of time scale or 1 lakh rupees, whichever is higher. And then we have included the salary of the sweeper, which is the facility provided by the employer. Okay, so one more example. Let me go through this example, and I would recommend that you solve this one yourself. Mr. Tahir is employed in company after his retirement from army. Detail of his income for the year ended 30th June 2019 are as under: 20,000 rupees per month. Remember, PM stands for per month. Then entertainment allowance is also 1,000 rupees per month. Employee contribution is 24,000 rupees. Again, this is already included, so you would not have to include it. Employer contribution is 24,000 rupees. Now, in this case, you would have to see the rule of unrecognized funds, right? So in case of unrecognized fund, if you do not remember, let me recall it. The employer contribution is not taxable, and in case of this unrecognized fund, the interest is also not taxable. Then he has been paid rent-free accommodation. You would have to calculate the 45% of the basic minimum of the time scale. If minimum of the time scale, as it is not available in this case, so you would have to use the basic salary, yearly basic salary, remember, not monthly. The company also provided him electricity worth of 45,000. So this is also taxable. You would have to add it. He has been provided a car by his employer for personal as well an official use. So 5% of this purchase amount would be included. So that's all for this lecture, and in next lecture we are going to discuss the fixed tax regimes.